So at this point, I think we can just hand it over to Willywoo. Willie, there's love for you all around the world, and as you can imagine, Greece is no exception. So from our community side and everyone's side, I just want to thank you for being here with us today. We just want to hear your thoughts on where you see things going, or what kind of things you're looking, at this point regarding Bitcoin on chain, and anything that's got your attention the last couple of weeks.
I was just saying I'm coming in from Hong Kong. I've only spent 6 months here in Hong Kong so far, but I found the community to be absolutely great. The Hong Kong Bitcoin Association, very professionally run. So anyone who comes to Hong Kong should definitely pay us a visit over here. I've got 5 minutes. I've been given 5 minutes, so I'll just lead us through probably 5 slides. So let me just share you a window. Alrighty, this is kind of the latest work I've been doing. This is really something I've been wanting to do for a while, is to really track the adoption of Bitcoin. And I said, early on, one of the studies I did back in 2016, 17 was that we found that the user base of Bitcoin was doubling every 12 months. So kind of a Law's More, or that early part of the S-curve of adoption. And, at that point I said, if we continue this, we'll be at half of the world population, like using Bitcoin, which was almost inconceivable back then because the numbers were very, very low, maybe 5 million at the time. So now, many years later, 4 or 5 years has passed, and we've got a lot better data on this. The Cambridge Centre of Alternative Finance have done an annual benchmark study, and the latest data came through in the 4th quarter of last year. And on top of that, we've had information on chain from Glassnode. So what I did was put together this data to actually track how we're progressing. And the numbers were pretty surprising. Well, it wasn't. It was actually on track to what the original sort of doubling was. But here I've overlaid where we are in that adoption cycle against, say, PayPal accounts, internet users, and the world population. And you can see that we are continually climbing here. And we're actually on track for 1 billion users of Bitcoin in another 4 years. I think the number as it stands right now is around 130 million users. So it's growing very rapidly, and that is actually 2% of the world population that has exposure to Bitcoin. And I'll just flick over to this chart, which is actually a chart that I use for the research, and that shows you across since the 1980s, actually, it's got the adoption of mobile accounts, zooming up here to world population, and slightly above world population for mobile accounts, because some people have more than one mobile phone. There's your internet users, there's your PayPal users, and then in the green line, you've got the users on chain, and we can identify those users by clustering their wallet addresses together and looking at the interaction. And then since the era of 2016 onwards, we've seen this massive growth in new users that tend to use their Coinbase accounts, their Kraken accounts, their exchange accounts to store their coins, and that's actually outstripping on-chain accounts by a factor of 3 to 1. So this is how we're getting our readout. It's continuing to double. A doubling is essentially a straight line up on this logarithmic chart. Yeah, so this is the reason why Bitcoin's price has been driven so exponentially high. And for those that aren't familiar with investing in new technology, they'll look at Bitcoin as this, crazy bubble, Peter Schiff kind of narrative. The people, particularly the people who aren't used to seeing new technology gain adoption from a very small user base to the world population, so to speak, won't realize that these technologies explode, and so does the capital base that funds it, or the valuation base that it's valued at. So yeah, I'll flick over to the next slide. This next slide debunks a lot of what the mainstream media are talking about with Bitcoin. I think the main FUD right now by Bloomberg and other news is that the Bitcoin holder base is very, very concentrated. I think it's like 95, they're quoting 95% of all of the Bitcoins are controlled by 2% of the people. And just want to show you this chart. This is actually the real data. The data they're looking at is the Bitcoins in addresses, and those addresses are not representative of individuals. The dotted line here, shows the coins sitting on exchanges, and obviously the biggest amount of balances sitting in addresses is these exchanges, which hold the coins for 130 million people. So a lot of this information is just misinformation. And actually what you can see here is the bottom trace is the owners, the rise of owners of Bitcoin between 0 and 1 Bitcoin. The orange is between 1 and 10. We call, this is the shrimps and this is the crabs. And then these traces here, the Bitcoin rich, so these are the fishes, the 10 to 100s declining over time, the dolphin and sharks, which are this red trace, which is people who own 100 to 1,000 Bitcoin, declining over the long span of this time. And the whales are declining too, which is this purple line. And I think this is the miners. These are the guys. A lot of these coins, by the way, from the miners are lost coins because these are Satoshi's coins and the early miners that tried the software and then threw their hard drives away because they thought Bitcoin was worth a few pennies. And so there's about 4 million coins that are lost to those guys. So the Bitcoins are very well distributed, I would say, for this early in the cycle, or early in its phase. It's only 12 years old, and it's continually to distribute well. So don't listen to the FUD you read from mainstream media. They don't really understand what's really going on. And I'll just cover some of the stuff that's happening right now in this cycle. This is the latest kind of chart put out by Glassnode. We look inside the cluster of addresses owned by individuals. You can recognize the funds moving between the wallets, and you can cluster them and say that these are different types of people, different people. And what we're doing here is we're clustering them and looking at the behavior of these individuals, these participants, and how they're interacting with their coins. And we're segregating the ones that tend to move their coins around into exchanges, trade with them. We call these more liquid coins, the coins that are held by people that tend to move and time the market. And then we have this illiquid participant where they tend to buy and hold. Coins come in, they don't really go out of their wallets. And you'll see that the red zone, I call these kind of the Rick Astleys of the world that, never going to let you down and never going to let you go. So whenever coins move to these people, you'll see that they drive this bullish movement. And obviously, in this current era, we've had, particularly since this COVID-19 crash, you can see this in the dip down in the March time frame of last year, that the reds, the Rick Astleys have come in. They've been scooping up coins. You can actually see this on the inventory sitting on exchanges where they're scooping them off the exchanges and putting it into their cold wallets. And so they're coming in, and they're coming in droves. We haven't seen this kind of pattern for a very, very long time, and certainly not at this scale. And you can even see that even now as the price is pulled back and everyone's scared these guys coming in and holding. They're buying a lot of these coins off the market. There's people talking about this thing's going to go down to 22,000 or whatever. But I just don't recommend, don't bother buying into the fear. There's an unprecedented amount of money coming in right now, and they're very strong holders. And it's very unlikely we'll start to move down into any kind of a bear market. Certainly, it's very, very early. Next slide here is actually the count of holders of Bitcoin that hold more than 1,000 coins in their wallets. These are the whales. And you'll see that what's happened is that, the rhetoric right now, the narrative is, the Michael Saylors, the Black Rocks, the huge hedge fund managers, the institutions are coming in and buying coins. But what actually has happened is that they've given the high net worth investor validation. And a lot of them are coming in because they haven't had exposure to Bitcoin yet. They've been told about it, and now they've had the validation by institutions. And this is what we're seeing on chain, is that there's an explosion of new users coming in, but also the size of the purchases are very high. And this chart in particular shows you this kind of explosion in the count of whales holding Bitcoin. So this is like $30 to $40 million of Bitcoin. You got to be like 500 million, I imagine, 200, 500, even $1 billion of net worth to put that kind of exposure into Bitcoin. Yeah, they're coming in, and you'll notice that they came in kind of after Michael Saylor bought his 650 million. And all of this phase up here was continual news that Bitcoin is actually a valid institutional grade investment, and high net worth people buy $1 million at a time, but they're coming in and competing against each other to buy. So they can't wait for the price to come down when this rally's going, and that's what we've seen with this price being driven up. And we're now in this sort of consolidation where the price ran up, was consolidating. I think that what's happened is this kind of dip was actually a failure of Coinbase. It was exacerbated by Coinbase in that their infrastructure partially failed. Buys on their exchange did not register. It was highly delayed, so only the sales got registered, and their price dipped $350 to $500 below all the other exchanges at that point. And what that did was it created this lower than normal price feed that all the derivative exchanges trade on. And the majority of Bitcoin is traded on the futures, the derivatives. And all of those traders saw a overly bearish signal. And both the algorithms and the manual traders started to sell off in great numbers due to faulty price index price coming in from Coinbase. And so what's happened is that this took the heat out of the rally, and the buying momentum stopped. As soon as the price starts to really dip like that, it's kind of funny because as the bargain comes in, people get scared off because the price is no longer rising. And so we're just in this really nice consolidation band. I wouldn't worry too much about it if anyone's trying to enter right now. I think it's a really good time. I probably wouldn't put too much emphasis on a lot of technical analysis right now, which tends to be things that traders use in these kind of indicators that were developed in traditional markets where things are in saturation. They are all reading overbought right now. And those indicators do not show the tidal wave of capital coming into the network right now, which we can see on chain. So yeah, I think that's the okay, that's the bulk of my slides, and I'll probably leave you with this one because it's a popular one amongst the general community. And this is my model for the top price of Bitcoin. It's actually hit in every cycle. I'll show you zooming out. It's hit there in the 2017. In 2013, it hit twice. It hit in this 2011 phase, and actually it probably would have hit in the emerging areas pricing back here if we had this gap between the Genesis block when Satoshi started mining and a few miners came in. There was obviously a perceived price, but the model couldn't use that pricing data because we don't have it. But it got pretty close. It's actually just a cumulative average of the price, and we do a multiplication on it. And something we call mean reversion. Anyway, without getting into the technicals, that's the model. It's worked in the past. If it works again, this is where we are right now. It's around the $100,000 range for the top. Obviously, it curves upwards as the bull market runs on. And so now you can sort of take your aim, so to speak. Currently, the gradient is shooting for over $200,000, maybe in the 300, maybe in the 400. We'll have yet to see how high that'll go. We need to see how high the price rallies in the immediate term, but that's the target right now, to 200,000 to 300,000. Conservatively, I'd even say. So I'll leave it at that. On a bright note, over to you, Leo. Oh, do we have questions?
Good. Oh yeah, I think we actually got a bunch of questions, but we're running short of time. I'll just leave it down to Anita to just filter for the most important ones.
Okay, one important question, I guess, is who is selling their Bitcoin at the moment?
Okay, so when the Bitcoin ecosystem, in the Bitcoin ecosystem, a large number of Bitcoins are being speculated on. So they're being traded between traders, and everyone's trying to beat the market and gain coins. So along comes these new buyers, and they buy those coins. So this is where we see the inventory sitting on exchanges deplete. So no hodler is really selling their coins. We're seeing a little bit in this sort of fear phase of the last few weeks, but all through this price rise we've seen is just sheer large numbers of coins moving off exchanges. It's it's the coins of speculators trying to trade it, and you know the new hodlers are coming in scooping it off. So that's it. We kind of reached a supply shock. The halvening happened, depletion happened for 10 or 11 months, and then the price rocketed up to compensate.
You were speaking of the number of users before. How can you know this? I mean, nobody knows who owns which Bitcoin address.
Yeah, well, actually, we can, you know, if anyone's used Bitcoin, you'll notice that you'll probably, the movements between coins that keep moving within each other, you can actually, like, they change addresses when you send a coin out. There's these UTXOs, these shards of Bitcoins. They send to someone, bits of it come back to your own wallets, right? And they might be in other addresses. And what we can do is forensically cluster those addresses and look at that interaction. And you'll notice that they cluster. They cluster amongst into a behavior that looks like an individual. So we can't attach an identity to that, not at the level we're working at, because we don't have the records from exchanges who are IDing it. And so we've got this very, very nice, very nice rise looking at the count of clusters. And this is counting clusters of wallets that are coming in and then clusters of wallets that are emptying. So there are people that leave. What we're counting are the people that are actively hodling Bitcoin. And then at a certain point, we need to actually look at the data on exchanges. So Cambridge, the Cambridge Centre for Alternative Finance, they do an annual study of the entire industry, surveying the data coming from the industry, and they do it through a number of surveys, and they apply a little bit of a analysis over that, and they make sure that they aren't double counting people. So their lower bound, which was the fourth quarter of last year, meaning that it was probably around June, July, August that data came in, was 101 uniquely identifiable KYC accounts, unique KYC'd accounts on exchanges across all the exchanges, and that was the lower bound. This is all the most conservative data. It's quite possibly higher.
Okay, thanks. Last question, because I think it's interesting. What is a whale? I mean, I guess it's a entity or a person with a lot of Bitcoin, but who are those? Are these exchanges or funds or something like that?
So what's the question? The question is, who are the people holding lots of coins?
No, what are whales? I mean, what's the definition of a whale? Is someone or a company with a lot of Bitcoin, but who are those? Are these exchanges? Are these large funds? Are these very, very rich people?
Okay, so anyone with 1,000 Bitcoins is very, very rich. We call a whale a cluster of addresses that are in control, that is in control of 1,000 Bitcoins or more. They're certainly not exchanges. Okay, so there is actually, I'm kind of not saying the right thing here. These are essentially entities or participants with more than 1,000 Bitcoins. There's almost 2,200 whales currently. We know that around 200 of those are exchanges, because exchanges hold tens of thousands to hundreds of thousands of Bitcoins. So they account for 10% of the whale count. The rest are individual or hedge funds or institutions. And you can zoom back. Actually, you could zoom back in the data and go, well, this was when the institutions started really coming in. So you can say, look, that was around 1,700. Subtract their exchanges. There's about 1,500 whales on the network, and that are individual, very rich people.
Okay, thank you.
Willie, that was awesome. I can tell you for sure that you've got everyone's attention here. I just want to say a big thank you for showing up on our meetup today. I think you've helped a lot of people, so feel free to stick around, and we're honored to have you with us on our meetup today.
Thank you for that. It's been fun.